Yo, what's up, everybody? Wow, that almost blew away. Episode 36 coming to you live. So, yes, I start off every episode and I'm like, yeah, my platform is killing it today. Guess what? I'm still on fire. We killed it today. I am transparent as hell. I'm going to show you slides later on. This is how we do it. I give you a recap. I teach a few lessons along the way, and then I spend at least like 25 or 30 minutes answering questions about stocks and options and specific questions that you have. So a little more about me, and some of you, this is repetitive, okay? I track volume, I track demand, and I see patterns, and that is what I share. Everything we do for my platform is organic. I charge $3.49 a week. I've been on fire for now 6 weeks. I'm not a financial advisor. I'm a smart guy. So let's get back to the market, okay? I started this morning off and I was like, hey, 10-year note is going down significantly, which is a good thing for tech. Usually strong tech day means a weak Dow day and vice versa. They rotate in for one, out for the other. Now today, there was a sell-off end of day. The good news was I've got all my options money on the side, because we knew that the CPI number is coming out tomorrow morning, the Consumer Price Index, which tells you if inflation's happening or not. Now, again, the inflation, the 10-year number has been going down. Now, what does that mean? It means that it's less expensive to invest in tech stocks. There's a ton of borrowed money in the stock market, probably close to $8 billion. So figure every little small percent that they're paying interest cost them extra money. So what was the lesson today? Same lesson as every day to my platform members. It was a morning video telling you to secure profit. But how do you know we're going to be profitable? Because we're profitable every day. That's why we pick stocks that have demand. And I'm going to mention specific stocks as I go on in this video. But let's talk about my video this morning to private members. It was a video saying that there was a battle going on. The market was very frothy, meaning certain stocks were up 5, 10, 12, 15%. And people are going to do the same thing as yesterday. When I say people, I mean the institutions. They're going to take profit. So what do? We plan ahead to secure profit. Now, real quick, here's a lesson for today, okay? If you're an options play with me and you enter into an options and we buy 10 contracts of whatever stock it is and it only goes up, yes, on average, I'm looking to secure between 100 and 200% return. Now, when we are into a position and we're into an options position and the stock is going down 40%, and we need to double down our options play, right, to average down, well, then I'm not looking for 100% anymore. It was a beat up position that's struggling that I used averaging down the correct way. So what am I doing? I'm looking for 30, 40, 50%, and I'm happy. I go from minus 40% to plus 40%. Now, I'm going to give an example real quick. I had a private lesson today. I spoke to the gentleman. He was in Jumia. He has options expiring on Friday. He was down 40%. He said, what do I do? I said, well, it's extremely risky to buy the same options. And he said, I already did that. I said, okay, well, here's what you're going to do now. You're going to buy out the July 16 options. And he paid $1.14. After I told him that, what happened? It went down to $1.09. So he could have saved 5%. Now, what did he do after he bought the options? He put in a sell order at $2. Yes, he paid $1.14 for the Jumia July 16 options, maybe the 17th option, whatever that Friday is. And then he sold them at $2. So he made 80%. So he went down 40%. He only lost 20% on that position. He made 80% on the other position. So he turned a net profit. That's what we do. We think. You have to think ahead. You don't throw good money after bad. That's how you blow up your account. Just saying, okay? But let's talk about what I saw this morning with specific stocks, okay? SPI, an energy company that's had extremely light volume the past few days or the past few weeks. And I noticed this because I also look at Romeo. With Romeo and SPI, they tend to run together. So SPI was getting $500,000 of volume, 500,000 shares of volume. Pre-market was up 50%. I said it won't happen. It'll go back down. It did go back down. But what else did that tell me? Root was up pre-market 15%. My ask on my spreadsheet for Root was $14.33. How the heck do I do it? Because you know where Root went today? It went to $14.34. I got triggered at $14.33. I'm out of the position, and it went back down maybe like half a dollar or something like that. The point is we secure profit. I did the same thing with Party City a few weeks ago. Guess what? Party City came out with earnings. They spiked past $10. So again, I got out at $10. It went to $8.50 after that, and now it's above $10. The point is we secure profit. That's what we do. Now I'll mention Tiger, because if you watched my YouTube yesterday, and Tiger had an offering, right, which was even lower. They said $26.70, and then they made it $24.50. Again, Tiger, T-I-G-R. And I showed you guys all the demand yesterday and for the previous couple of weeks, all right, down to May 25th. So I said Tiger would be strong today. It was up 3% pre-market. Again, they had an offering. I said, don't be surprised. Psychology is selling if people sell off and we get a better entry for those options. Yes, that position returned over 100% today. So yes, we do it every day. We pick a different position and we score on it. Let me tell you what's going to happen tomorrow, okay? It's either tomorrow or Friday. We do the same thing every Thursday and Friday. I'm hoping the UVXY spikes tomorrow morning. Right now, I think it's at like 33 or 34, whatever it is, maybe 34 and change. I'm hoping it spikes to like $35.50 or $36. I will be loading up with puts. Now, I won't enter them a different way. We enter at the 25% rule. So if I'm going to put $20,000 into this position, my first purchase will be $5,000. If it starts going the reverse direction and it spikes even harder, then I enter again with another $5,000. That's the point. We don't enter right away with 2 feet. We don't jump right in. It's very dangerous. So on all of my trades, I try and limit my risk and get max value. When I evaluate each trade, it's like, how much could this trade lose? Oh, 30%. How much can it make? Oh, 30%. 30%, 30%. I'd rather go to a casino and flip a coin. That's not what we do. We invest smartly. So we're looking for demand. We're looking for volume. I do teach how that happens, and I show it to my platform members. Okay, I'm not a financial advisor. Let's remember that, and let's remember what I ask you guys to do for me. Besides for watch, thumbs up. Please like it. Subscribe if you're new. All right, my YouTube videos are informative. I'm giving you content, and it's free. If you want to join my platform, there it is right there on the bottom of the screen. It's $3.49 a week. Our retention ratio is over 99%, meaning once people join, they just don't leave, okay? I mean, I'm on fire. We're all making money. I charge 50 cents a day. People are showing me returns, and I'm going to show them in some slides today to prove I am who I say. You know, I'm transparent, and it is what it is. My rules work. If you follow the rules, you turn small piles into big piles. Okay, EBON. I mentioned EBON for 2 straight days. I mentioned we might see 20% this week. Well, we saw 11% this morning. It retracted to 5% positive gain for the day, but my options killed it. So I exited out and I bought again, knowing that the market would dip. I bought right before the close. Again, transparent, personal position. I have the same options that I sold. I basically saved myself about 18%. So yes, that position, which I have about $18,000 in, saving 18%, I saved myself $3,300 today. Every little bit counts. We nibble, we sell high, we buy low. Okay, other stock, Tiger I mentioned, Jumi I mentioned. Oh, on the spreadsheet, my stock plays, since I closed out 3 more winning stock positions, are 22 wins, 3 losses, okay? My option plays, 55 wins and 14 losses, okay? My platform's been around basically 8 weeks, 2 days, something like that. I charge $349 a week, and I closed out Root. I already mentioned at $14.33. Cleveland Cliff, CLF. I closed it out yesterday at $20.20. What did it do today? It spiked 13%. Now, why did I mention I closed it out yesterday? It wasn't doing what I thought it was going to do. I thought it would move 20%. It didn't move 20%, and it was just stagnant. And I said, instead of being, just holding on to every open position so I can claim profit, I'm a transparent person. I'm going to sell it because sometimes you want more money on the sidelines. So that's exactly what I said. I'm selling CLF. I want more money on the sidelines. I can hold it because I do have money to hold it. And it just didn't move where I was, so I'm going to sell it. But it went up 13% today. So in theory, again, I was correct, but I have money on the side. The good thing is I didn't lose any money. It didn't go down. If it had went down, I would have lost money. So that's the point. ACY 2 days ago, 34%. Cleveland Cliff, 2%. Root was 49% return. FSR, which I closed like 2 days ago, 34%, or actually I might have closed yesterday. Oh, let's speak about TRIT. Spiked at the end of the day finally. Now you'll see I speak about that stock, and somebody asked me yesterday, the day before, TRIT, Triterus, or Teteris, or whatever the hell it's called. Basically, I said you need volume. Each day it's 400, 500,000 shares. Today, you know what happened when it spiked? 3.3 million shares. Yes, that's why it went up. Nobody's selling. Institutions have been buying for a long time. But again, that's not even volume. Volume for that stock, like over and above, would be like 9 million. 9 million, that'll spike to $10. But people had great returns, 240%, 260%. CPIs tomorrow. We're going to get to that tomorrow morning. I will update the platform at 8:30, 9 a.m. Once the CPI numbers come out, you will also see what the market does. But there will be nothing to do tomorrow morning before 10:30 a.m. because we need to see how the market unfolds. Again, money on the side is good. It means we're not losing money. You jump in too soon or you jump in the wrong position and you're down and you're riding the position. And the people that can't day trade are really screwed. And the people that can day trade are so nervous that they're buying, they're selling, whatever it is. Okay, let's get to some slides, can we? So we'll do some slides today. Let me tell you what we have here. Oh, yeah, we're going to show some results real quick. So this is slides. These are things that people tweeted me. Finally back on house money. Matt, I can't thank you enough. Dude made 17%. I think that was yesterday. Next slide, please. All right, I haven't had green day in a row since I haven't had 6 green days in a row since I started following Matt. Now let's keep in mind the market's been extremely tough. So it's about strategy. It's about planning ahead. And I know it sounds repetitive and you guys say how simple this must sound to plan ahead. I can do that. Anybody could buy something on sale. No, it's about execution. Next slide, please. These are just random people that follow us. I can't really see what this dude made. I think it was between 4,000 or 5,000. Today was a great day. Thanks so much. Again, tough markets, we're making money. We have strategy. We enter, we exit, we secure profit, and we wait for the next day. Next slide, please. Yes, and there are a bunch of slides. My point is, everybody's showing this. Yes, Webull has traders that you can add a calendar. So look at this dude, $192, $170, lost 440, plus 826, plus 529, plus 1.4. We make money every day. Next slide, please. I need to show proof. People that haven't followed me before or don't know who the hell I am, the only thing I have is my transparency and then what my followers and what my people are sharing. And this is all publicly shared. My little account, yes, you don't need much. I had one person, Romeo, who just signed up to be a private platform member. He had $84 to $584 to $2,100. And then yesterday he bought a Tesla option. I mean, you have to have money if you're going to buy Tesla options. He did make 60% on that one. So this person showed us their P&L. They're almost close to 300 again. Right direction. Good month. Next slide, please. Let's see if we can go through. I have questions. Oh, you stayed green in this shitty market. Again, he made 16.76%. That's a great freaking day. Me personally today, I made about $4,000 today. It was about 16% of my options account. I was happy. Next slide, please. It's all about securing profit, getting out. Done. Thanks, Matt. I started with $2,800 6 months ago. I lost everything but $385. I found 349 Trading, which is our platform, family. Started following your rules, listening, and now I'm up to $1,200. Again, he's still down from $2,800, but $1,200 from $300, that's a 300% return. You follow the rules. Small accounts are welcome to join. That's why it's only $3.49 a week. I want your mother, your brother, your sister, your doctor, your dog walker. I want everybody to join. I want to disrupt the way people trade. Next slide, please. Great wrap-up show. So this was from yesterday. He jumped in Mara today. He got out. It ran 40%. I think he made 40%. Point is, even if he didn't day trade and he got stuck in Mara another day, Mara jumped another 10% today. His contract probably would have made another 70 or 80%. So good job. We secure profits. That's what we do. We do not look at the glass half empty. We look at it half full. We look at our accounts growing, not what we missed out on. We do the safe thing. It's all about risk adverse. Okay, next slide, please. Hopefully we're almost done with these slides. I'd love to get some questions. Oh, thanks, Matt. 349 family. Obviously, you can see it spiking. I can't see much else. Next slide, please. That might have been Tiger because Tiger was a good one today. The Transparent. That's my public Twitter, the Transparent 15 without a T. Slowly recovering, being patient and following the rules. And it looks like you're back up 2,700, but you can see the curvature in his graph. Next slide, please. Man, how many of these slides do we have? See, I send these to Carlos and then he loads them up. Matt, I had $89. Now you have $317. Okay, so what kind of returns that? 300%. Excellent. Next slide. I think we have better slides. Earlier as I sent Carlos, maybe he's just picking up the small ones. Oh, this is my alert to root. Again, pre-market. There it is, 1131. I gave you my price target. Transparency. What did it hit today? 1434. Who got max value? This dude right here. Next slide, please. It's all about max value. Okay, this is my pre-market tweet. 10-year was dropping, should be gone for tech. So this is a summary that I sent out. I show what I'm thinking, and I tell everybody, make sure you secure profit. Why? Because the market doesn't go straight up. If your stock is spiking, we want out. We want out on the spike. The options look extra tasty. So when your stock is spiking and you put in an ask of your options position really high, when it's going up the stock, somebody's on the sideline and going, I guess I would pay $215 for that. So they overpay. We want to get overpaid and we want to buy everything when it's on sale. Next slide, please. Do you guys get it? We buy on sale and we make people overpay. Rules work, people. This is half of my Tiger position. Took 135% gain. Okay, that's awesome. Now remember, Tiger had an offering 2 days ago. Generally, and I say 99.9% of the time, if a stock does an offering, it goes in the shitter. It goes in the toilet. Tiger, I told you guys that the demand is there and the volume is there. And on outflow days, which we had, the volume was so small. So don't be surprised if this offering that you're doing, somebody eats up all the shares, and then there's demand again and it spikes. If the market was stronger, Tiger would have hit 30 today. It's coming soon. It's one of my favorite stocks. And they just did an offering and it's strong again. So what does it tell you? It tells you the future's bright, baby. All right, next slide, please. So yeah, I'm looking at Tiger always. Anytime Tiger dips, here, what do we make on this? 119%, $4,500. We're in, we're out, and we make another 100%. Next slide, please. So 100% on Tiger. We had another stock that we made 100% on this morning. Oh, Ebon. I thought Ebon would pop. Now remember, I mentioned this when it was $3.48. Well, it went as high as $3.74 today. I exited out right after I shot this. So I exited out about $3.70 and I bought back in on the dip. That's what we do. We secure profits on the spike and we buy back the dip. Now, if this kept spiking, I would have been screwed. I would have been really upset at myself. But again, we do what's right and we follow the rules and it works out. All right, next slide, please. God damn, it is hot out today. Okay, so when I had Jumia options this morning, and here's what I look at. I look at the 1 month chart, okay? And you can see that small sliver of yellow, okay? That means it's an outflow day. So when it's an outflow day, I expect this stock to go down. Now, Tiger had an inflow day. I might have that slide next. And I said that stock will go up. So Jumia, I said, let's run for the hills. Let's get out. I did help some people average down. But again, you saw it got crushed at the end of the day. So even if you average down correctly, you're a victim of circumstance and you're a victim of the market. And hopefully it bounces back. Next slide, please. The point is you can always use the 1 month chart. So here it is right here. Tiger was at $26.72. Now remember, I think it went as high as like almost $28 today, or it did. It went over $28. So this is the morning alert at 10:04, and I'm showing you guys in the 1 month chart. If you look at today's, it's inflow. So I'm telling you the stock's going higher, right? And then I showed you guys a wall of 10,000 shares, $260,000 that basically got eaten up. So when that happens and we're at 26.5, the stock went up another 5%. That's what we do. Then we secure profit. When a stock is up 10%, that's good for us. Our options are up 100%. We don't need a stock to go up 50% because we know that shit's not happening. There are institutional investors. And if you tell me the stock goes up 14% today, I'm selling it. Even though I love it, I would sell it. So will institutions. It's all about securing profit. Next slide, please. So these are all lessons that I teach my platform members and that I share with my platform members and that I want you guys to see so that when you pick your own stocks, you can identify when there's strong demand. You can identify more inflow than outflow. Do we have another slide, Boris, or is that it? I'm guessing that's it. All right. I love that shit. Somebody does that for me. So again, I appreciate everybody doing this with me. We're going to get some questions real quick. Part of my screen went blank. I'm not really sure what's going on. Okay, Matt. We had Jumia. You have 11 Jumia 33s expiring Friday, 40% down. Do you still have a chance to break even? You missed your chance to sell today. Okay, so what I would advise is, I don't know how much you paid for those, okay? But let's say you paid a dollar just to make it easy. So you spent $1,100, all right? They expire Friday. You don't want to jump on that. Although it could turn around and yes, you could break even, you could average down, you'd be down like 17%. I don't want you to do that. I don't want you to buy Fridays. I want you to do exactly what I gave to the private lesson today. I want you to buy out to July, okay? I want you to spend the exact amount of money that you spent this morning or yesterday. So if you spend $1,100, spend $1,100 to $1,200 to $1,300 on those options. That way, if Jumia recovers, but it's not tomorrow, it's not the next day. Next week, it pops 10% from $32 to $35 or $36. Guess what? You're going to lose this position that you have exiting Friday, and you're going to make it up on your future position that's exiting in July, and you give yourself more time. Now, I'm not telling you to sell your position for Friday at a loss, which right now it would be a loss. What I'm telling you is to plan ahead. So let's say your options are worth 25 cents or something to that extent. I would say I would put in an order tomorrow to sell at 50 cents, which is 100% return for tomorrow. Now, if it executes, great. You just had strategy and you executed and you saved, I guess, or you suffered less of a loss because you planned ahead. So plan ahead. Just like the gentleman I helped today, I told him to sell at 44 cents or 42 cents. If things spiked to 50 cents, so yes, he could have got more money, but at the end of the day, it went down to like 30 cents. So he got out. He only lost 20% on that trade, and his future trade, he made like 80%. So when you put them together, he was net 60% profit. So hopefully that makes sense to you. Anybody else that has options expiring in 2 days, you always have to buy yourself more time. You don't throw good money after bad. So you buy the same option out a couple more weeks and you use the same, if not more money. So if you bought $1,500 worth and it's down 40%, great. Average down by at least $1,500, maybe 16 or 17, and buy 2 or 3 weeks out and give yourself more time. Next question. All right, Justin. Yes. So if you want to ask a specific question and you're not being answered, there's a button on the side. You can give a tip or something like that. We'll just use it to build a platform, or I use it for a slice of pizza when Carlos actually lets me. All right. What's my exit strategy for CSIQ and TRIT? That's a very worthwhile question. So CSIQ, I bought about $2,000 worth of options today. When the stock was dipping, it was down 75 cents. So I'm actually going to tell you, I don't know. My plan is I'd like to make money. So as long as I'm profitable, I'm not really sure. So it finished the day off 58 cents. So I guess I'm positive at least 17 cents. When I give alerts, I'm calling the bottom. This was a swing trade. I thought the market could recover. Instead, it sold off. Now, the good news is the stock is still 17 cents higher than my alert. So I'm probably plus or minus 1 or 2% of the options. Now, TRIT, again, it spiked because of heavy volume, which I mentioned earlier today. Now, because the market sold off at the end of the day, you saw some selling off, some profit taking. Do you know how many people have been in TRIT holding heavy bags? A lot, and they can't wait for the move. And the first day that it finally pops, they sell. You know what I would be doing? I would be purchasing more. When I see a stock like that pops, it's only showing you what's getting started. It's like a spark when you're lighting a fire. So you're lighting a fire, you're like, there's almost a fire, there's almost a fire. When this shit is on fire, it's going to explode. So yeah, double digits for TRIT. I looked at the option plays there. So there are a lot of people buying July options. When there's so many open positions, it tells me that they're expecting an upward movement there. So that's a good question. Oh, exit strategy. I don't know, CSIQ, at least $40, which is at least $1.50 from where it is. And again, my options expire on Friday. No, do they? I think the options expire June 18th. I think those are the only ones left. And TRIT, June 18th as well. So yeah, I'm holding. I'm holding until I get a better spike. That's just my plan. Next question, please. Let me drink some hot water here for my throat. When, if all, is it good to exercise options? I never exercise options. This is me. Let me tell you what I use options for, because some of you think options are really dangerous and it can turn into disasters. No, it's basically, if I want to buy 100 shares of a $20 stock, I need $2,000, okay? If the stock moves up 10%, I just made what? $200. That's not very much. It cost me $2,000. I only made $200. For an option, if I buy one option, it might cost me $200. If it goes up $2, like I said, guess what? I probably just doubled my money from $200 to $400. So the point is, that's how I use options, okay? So when is it a good time to exercise options? Never, unless you have a boatload of money. You have millions of dollars sitting behind you, and you really like the stock that you have options in, then yeah, exercise the options. If you want to own the stock, that's when you exercise the options. If you're thinking about a short squeeze, like you're in TRIT or AMC, that doesn't happen anymore. Take the volatility and use it and sell at the peak. If you're in AMC, try and sell the peak. I've told you guys from last Thursday, it's just going to go down. It was like $72. I warned you guys getting out. I think it was 55. Maybe it lost another 10% today. Maybe it's at 50. Maybe it's at 40. I have no freaking clue. But it's going down. The real value of AMC is probably around 12, 14, 16, maybe $20. I don't know. All right, next question. I don't know how I got onto AMC from is it good to exercise an option? Okay, you had an order that didn't execute for the SDOW 33 puts, 95 Ford calls, and CCL calls expiring 6/18. All right, so first, let's go to, they're all 6/18. Okay. Yes, on the Ford calls. I really like Ford. I think Ford is consolidating. Now, what does that mean? It means after a stock goes up, like Ford went up from 12 to 14 to $16, touch 17, it consolidates. The market's bad for a few days. In fact, like 5 days for the Dow, the market hasn't been strong. So Ford's a Dow stock, okay? So people are selling. They're selling. It's down 30 cents, 30 cents, 30 cents. I guarantee in like a month's time, Ford will be like $20, okay? So I like Ford. I might average down on that. I would either average down if you have 6/18 options. Yes, you can average down on those. Or you can go out a little further and buy some more Ford options. Again, when you average down, if you put in $1,000 the first time, put in $1,000 the second time. Maybe a little more because you know that you're calling the bottom. Carnival, I would do the same thing. The S-Dow, I don't know. It really depends on the market. Again, the Dow has been beat up, so I'd probably look to exit out of that. I'd be more secure with Carnival starting cruising again, and Ford coming out with their EV F-150 truck and some other bits of information. All right, next question, please. All right, Matt, my rules are awesome and they work. Yes. So for anybody that doesn't know, I have specific rules on my website, okay? I talk about stocks, how we enter, how we exit, how we purchase, what percentage we use of our money that we're using for that. For options, we do the same thing. I have specific rules, and then we plan ahead. I also talk about the psychology of trading, who's buying, who's selling, and why things happen the way they do. So this is all $3.49. Come on my website, snapshot it, stay 1 week if you want. I don't care. Give me your $3.49 and then leave my website. Now we have 99 retention ratio, 99%, which means people stay. They just don't leave. All right, Matt, my rules are awesome. What do I think of skills? Good. We got back to a stock. That's great because I know people are pretty bored of me talking. I know I'm bored of me talking skills. SKLZ. All right, here we go. And it went down 3% today, which is not much of a movement. So let's look at the 1 month chart because that's what I do. So what did you see today? I'm going to tell you, anybody that wants to look, SKLZ, I'm adding to my watch list. Why? Because today was a day where it consolidated down to a level. It was a bigger outflow day than inflow. So the chart looks great. It spiked. It went down for 2 days. It spiked. It goes down for a day, maybe 2 days. Maybe it goes down tomorrow. But I might actually be buying this. Let's see where I think skills can go. I think it could go to 31. So it's at 22. I think it could go to 31. I'm not sure if it's going to move tomorrow if it's a green day, but check it out. Check the 1 month out, the 1 month chart at 10 a.m. If it's green, you'll know it's an inflow day and skills can go higher. If it's red, you know it's an outflow day. Watch out. You could drop another 3 to 5%. Okay? This is simplistic way to look at it. 10 a.m., go to a 1 month chart of your Webull or Robinhood or Morgan Stanley or whatever it is. I'm simplifying it for you. That's how I knew to get out of Jumia today. That's how I knew to get and make my position in Tiger stronger. Same with eBond. Again, all these things you'll see at 10 a.m. And it's kind of like cheating. You guys just got like $1 million lesson right there. Next question, please. Tiger, strike price 30. July calls bought yesterday. Oh, Tiger looks strong. Tiger looks strong. I had the June 18th calls that were currently 60 cents. And I sold a bunch of them for $1.20 and $1.40. And then you know what happened when I looked later in the afternoon? It was $1.50. So yeah, they went up 150% today. I like Tiger. Any dips, like probably at the end of the day, I would be buying more. Again, I'm waiting on the sideline with my money because I'm interested about the CPI number. Now here's what's going to happen tomorrow. Say the market looks like it's going to tank at open, okay? No fooling. And the 10-year is spiking. If I know the market's going to go down, that means the UVXY will spike. I might just sit on the sidelines until it cools down, and then I might buy puts. Or I might buy calls in the SDOW thinking the Dow might crash, or the SQQQ thinking tech might crash, okay? It really depends what we hear tomorrow morning. Now, if it's good news that we hear, then the UVXY will go down. Those other ETFs will go down, and the market will be strong. But based on the selling at the end of the day, and just to tell everybody, there was some crazy strong selling right as the market closed. Right as the market closed, there was huge volume, and it was all negative. It was all outflow. It was all people unloading stocks. So if your stock looked like it was going to recover with 2 minutes left in the day and then it just fell off the cliff, do not be surprised. So I'm going to wait to see tomorrow morning. I'm so glad I have money on the side because I would be nervous as hell. I'm not going to lie to you guys. I'm not trying to give you guys a sleepless night, okay? But this is me being transparent. I took my money off the table. I wouldn't even be in Mara or Riot or any of those Bitcoin stocks tonight because Bitcoin just moved up like 10, 12% or something like that. It wouldn't surprise me if they wanted to sell it overnight. Now, if you're in Bitcoin stocks, okay, please sell before close of business on Friday. Why? Because every Saturday for the last like 4 or 5 weeks, all crypto has tanked on Saturday, okay? So I'm just following a pattern. If I'm wrong, I apologize. But if I'm correct, you'll be thanking me, okay? Do you know how many people left my platform when we first started because crypto was so off the charts and they're all talking about 80% return and this and that? They lost all their money. They came back to my platform. They're like, crypto is crazy. I lost 80%. Yes, very volatile. The U.S. government's going to do something. They're going to crack down on crypto. I read something this morning. I didn't get too much into it because I don't really have any strong positions there. All right, next question. And I don't know how I get sidetracked sometimes. All right, what are my thoughts on ASXC? Okay, so I can tell you my thoughts on XL. I am bullish on XL. Again, when you saw what happened today, I guess maybe it dropped to like $9. Let's see where XL finished at so I can give you exact examples, because it's great to give specific predictions. When you have anything that you're working at, please give a specific prediction when you're predicting the market, a stock. Okay, so XL finished over $9. That's huge for this stock. That's great. And look at this chart. I'll show you the chart. Can you see it? It looks like a U. All right, so I love XL. So I'm going to look at the demand. I'm going to go to the 1 month. Anybody's welcome to do that with me. We look at the 1 month chart, and today outflow was stronger. So it was consolidation. It's another stock. So just like skills I just spoke about, XL will probably explode. And when I say it explodes, I'm saying it's going way past 1050. So that's a $1.50 move from where we're at. That's like 15%. So if you want to buy options, I can't believe I'm giving this out for free again. I would buy XL options. I would go out to July, I'd spend a little more money, and I'd probably buy like the $10 calls. And when it spikes to $12, I'd get the hell out, even though it could go higher. Workhorse went higher. There were a couple of Fiskers still off the charts. I sold my Fisker. I think it went up more since I sold it. Sold it just under $18. Then it spiked past $19. I don't care. I made crazy profit. On my Fisker options 2 weeks ago, I made 225%. On my Fisker stock, I made 49%. No, 34%. Numbers are very important to me. Okay, so yes, I like XL. I don't know where the other question went. There was XL. There was 2 other stocks you were asking about. Can we bring that question back? Hey, Boris, can we get a question on there, man? Okay, so there's no questions, so I'm just going to speak about my watch list now because I don't know where all the – oh, here we go. Delta options that expire 6/18. Okay, so anybody that has Delta options that expire 6/11, which is in 2 days, yes, you might be in trouble. Now, you have 6/18, $47 strike. So let me see where Delta is because I don't know how close it is to $47 right now. I had the $42 calls for – I don't even know where Delta is, man. Guys got me so baffled here. There were questions and there weren't questions. I think the other one was Carnival. All right, so Delta, again, heavy outflow. So we've had a heavy outflow. 1, 2, 3, 4, 5, 6, 7 out of the last 8 days have been outflow days for Delta. 7 out of 8. What is that, like 70? No, it's 87%, right? 87.5%. The point is, Delta was at a high of 47 and change, and it's only lost about $1. It's lost about 2.5% with 7 out of 8 days being shitty. Okay, all the Dow needs to do is have a strong day. Delta or the TSA or somebody comes out with good numbers for cruise ships or for COVID or for whatever it is, and Delta will boom. Okay, but right now they don't like the airlines, so I don't know. 6/18, I think you're good still. Yeah, I think you're good because you have more time. If you had 6/11 options, I'd be more concerned, and I would think about a way to sell on a peak and then buy out a month. So here you go, real quick. If you have options that expire in 2 days, what you're looking to do is plan ahead. So whatever your option's worth, 40 cents, all right? Get profit. Secure 40% profit. If your $40 option, sell it at $56. Whatever the stock is, if it expires in 2 days, take that 40% gain tomorrow. And then when it dips back down, you buy out 1 week or 2 weeks. It still lets you feel good about Delta, that you're going to be correct about Delta, which you will be. Delta will be 65 come August. It's like, 46 and a half now. So 65, that's $19. That's about a 36% increase in stock in like 3 months. But I'd rather be in options because my option play that I talk about in my options video, which released 2 Sundays ago, it has an orange screen or whatever. Delta's going to return 100 to 400%. I think I was up 70%. I'm probably up like 40 or 50% now. It's going to return a few 100%. So if you want to, you have 14 minutes, subscribe to my channel, watch that video. Now, what other videos are good? If you're stuck in a shitty stock, you're down 40%, 50%. Watch my my video number, Ask Matt, number 14. I talk about stepping in shit, stepping out of shit, buying leap year options or something like that. So it doesn't matter if you're down a stock. We did it with CCIV at $19.50 for one of my private lifetime members of my platform. Oh, shit. I didn't even mention it. So anyway, I got at least 23 DMs on the side telling me people missed out on my lifetime member because we cut it off. We only cut it off so I could catch up on the lessons. I talk to so many people a day. I send out these tweets. I do this YouTube video. I do my own trading, whatever it is. But the good news is I killed off so many lessons in the past 2 days, like literally like 8, I believe. that we're going to open up the lifetime membership. Now, if you want a lifetime membership, it is $800. You get obviously a lifetime membership, and it includes a 30-minute one-on-one session with Matt. And we also have some gear coming out at the end of the month, hats and shirts and stuff. We're going to send it to you. You also have a VIP access email. And when we do new stuff, which we're doing coming up in 3 months, we're going to do beta testing. So the 50 or so lifetime members that we have already, you will be included in this small elite beta testing group. So anybody, I think I'm going to open it up to maybe 10 or 20 as soon as this is over, or maybe Carlos did it for me already. Again, if you're a lifetime member, you pay $800. You do not pay $3.49 a week. You get tutorage by me. I answer side questions for you on positions and stuff like that. But I'm not here to sell. I just know a lot of people need it because some people get it and then they don't get it. And if you're trading with $20 or $16 or $8,000, whatever it is, I can teach you to nibble. I can make you fourth. I mean, it just makes sense. Anyway, I'll pass that. All right, Delta options. I mentioned that. Let's go on to the next question, please. Sorry, I get sidetracked. I meant to mention it before, and I said we were going to delay lifetime members so I can catch up. And as you can hear in my throat, I'm a little hoarse and this and that. But I actually have a good time talking to these people and helping these people. And the light bulb goes off every time. And each time we talk about a specific stock, when I'm giving one of these, the stock spikes. It's crazy. I'm like, hey, look at this. It's like, phew. Okay, AI dropped a lot. Doesn't look good. So AI has been selling off for 2 days after they came out with earnings. And somebody in my platform said, AI looks great yesterday. Let's get in. And I think it recovered a little yesterday. Maybe they made like 5 or 6%. Then it dropped 1.5%. Let's look where AI went after us. So if you got in on the biggest dip, you're probably still okay. But if you chased yesterday thinking there was demand and you were going to hop in today, there was reconciliation today. Well, it was only down $1.88 today. I actually like the chart from AI, and I would not be surprised if it passes $70. So this is $62. And when I say I wouldn't be surprised, I say 2 weeks of strong tech, not even has to be strong tech. 2 weeks, there is demand. Now, I would be very careful because there was huge outflow on June 5th. So it's either going one way or the other. It's either going back to $55, all right, AI, back to $55 on the downside, which is 11% move, or it'll go back to $72, which would be more like in 16% move upside. So when I tell you guys, risk versus reward, downside 11%, upside 16%. If you buy options, same thing. It'd be like 40% downside, maybe 70 or 80% upside. I'd probably take a chance, okay? AI dropped. I have a lot of Delta 45 options expiring this week and next. Okay, in September. Well, I just spoke about Delta. So this week, maybe tough. Next week, you're probably okay. And September, I love my September Delta calls. All right, next question. Doing pretty good. Hey, John, how's it going? Matt, do I anticipate the SDAO going down to 32.50 by next Friday? That's a good question. Now, if you have $32.50 puts, okay, you actually need it under $32.50. That's why I tell you guys, buy in or at the money. That way you profit when it goes down rather than it not increasing your position. You're like, hey, it's going down, but my shit's still at $500. Why isn't it going up in value? Because your options are out of the money. So let me look at the SDAO real quick. Again, I looked at the Dow and I just mentioned 7 out of 8 days there's been outflow. 7 out of the last 8 days Dow outflow, and it still hasn't gone down that much. Okay, that's a good sign. It means once there's an inflow day with positive news from the president or positive COVID news or something, or the numbers come out tomorrow, the inflation numbers, it'll do something. All right, so what are we looking at? SDOW, SDOW. Let's see where we're at first. Yeah, it's been inflow for 3 straight days. The chart, yeah. I mean, it's telling me what the Dow did. The Dow sold off 7 to 8 days. 33.30 right now. You're looking for 32.50. I wouldn't count on it. No, I'm not going to lie. I don't see it happening at all. In fact, it looks like the Dow started to turn. So this might be a time. This is very interesting. I mean, I know they hate the Dow for about 8 straight days. I know Dow stocks suck for about 8 straight days. This is making me more wary looking at this chart. I hope I'm wrong, and I hope the Dow shows me a good strong day. But I would be very scared of those. I would actually get rid of them on any spike, meaning if the Dow spikes 100 points or 150 points tomorrow, the next day, the SDOW will go down. When it's going down, you plan ahead so you get out of your position. As it's going down, people want your position. It looks tastier. It takes your piece of shit and it makes it look like gold. And someone's like, oh, that's gold. I'm going to pay more for it. So again, you wait for the Dow to spike. On the day the Dow is spiking and it's at 100 and you're like, I think it's going to go to 140. Positive, I mean. You set your price to sell your puts in the SDOW. And when it spikes that extra bit, someone's going to pay you the extra money. They're going to overpay you. I want people to overpay you. And I want, when we buy shit, to buy it on sale. Got it? We buy shit on sale, and then we get overpaid. Now, when things are going down, okay, and Matt says average down at 40%, if it looks like it's falling like a falling knife, like a falling pen, we don't have to average down. We can wait for it to bottom. So although I tell you average down on options at 40 to 50%, if the knife is falling and your option goes down 70%, like my UVXY puts last week, we were down 70%. I said, wait. And then when the bottom happened, I bought more puts the next morning, and I made 200% last Friday. Remember, we had our $1 million day. Yes, we had a $1 million day in my 349 platform. That was only the second one. The first one was April 23rd. You want to guess how we made $1 million that day? We only had like 600 members then. We have like 800, 900 now. We made $1 million by the UVXY. The same thing. It went down that Friday, April 23rd, and last Friday, which I don't remember the day. Was it like May something, June 1st? I don't know. Okay, next question, please. I get so sidetracked. All right, similar question. Jumia, 11.6. 11.6. Like you have November calls? I don't think so. Down 18.6. I have no clue what you're asking me. I have absolutely no clue what that means. If you have calls, you reverse the dates, June 11th, June 18th. Okay, so what would you do? I don't know. So how many positions do you have? Let's say you spent $1,200 in both positions. You spent $600 and $600. So you're in for $1,200. I would say take $1,200 more dollars and buy some September calls or buy some July calls. That's the best way and the safest way to average down. Again, that's saying that you think Jumia will spike up. Now, if you think Jumia might sell off, which I don't, I think tech is stronger than the Dow. And if anything's going to happen, Jumia is going to hit $36 rather than $30. Same with Plug, who's been struggling for like a day or two. I think there's more chance Plug jumps another $10 rather than retraces $10 or 20% or whatever you want to say. All right, next question, please. Please, when you have questions, pay attention to what I spoke to before and what else is going on. All right, will we be going all in? All right, no, we don't go all in on anything. All right, I always preach about safety, okay? So if you have $10,000 on the side. Okay, let's use me for example. I have like $28,000 worth of options money that I'm going to use tomorrow. The only thing I'm going to be looking at tomorrow is the UVXY. Now, first, I have to make sure that on Friday, I think the markets will stabilize. If I think the markets will stabilize tomorrow, based on the number tomorrow, if the UVXY spikes, I will buy $5,000 worth of puts in or at the money, probably expiring either Friday or the following Friday. Now, June 18th would be safer because tomorrow's Thursday. And if I'm wrong, then I'll get crushed tomorrow. If I spend $5,000 or $10,000 and I'm wrong tomorrow and it spikes even harder for Friday, guess how much money my options would be worth? Zero. So I'm not making a $10,000 bet. I'd rather pay a little more. So instead of $10,000, it might cost me $12,000 and I'll buy out the extra week. Always give yourself more time. And you know what's going to happen to the UVXY over the next week? It'll probably be at 31 by next Friday. Okay, and I'm not telling you to buy $32 puts. Okay, always in or at the money. There are rules we follow. My rules on the platform, they work only if you follow them. If you break the rules and you go out of the money, or you give yourself too little time, or you buy a shitty option. Now, I mentioned any option selling for under $30 or 30 cents per contract is probably a shitty option. It's under there for a reason. Now, if your contract is $1.80 and it goes to $1.20, yes, you average down. If it's 90 cents and it goes to 28 cents, no, we don't average down because it's telling you 28 cents is probably a piece of shit. So yes, join our platform on the bottom of the screen, $3.49 a week. It's 50 cents a day. People on my platform kill it. If you're late logging on, please watch the slide presentation earlier. I mean, it's corny. I'm changing people's lives. I'm helping them become better traders. So I'm not praising myself. What I'm telling you is however you learn to trade, whether it's 2 months in, a year in, 5 years in. I've got somebody, I think I showed this slide, but his financial advisor called him and he said, dude, Phil, how's your account spiking? What the hell are you doing? And he said, I actually follow this dude, Matt, 349 platform. He's been killing it lately. So yeah, 6 weeks straight on fire. Why? I track demand, I track volume, and I share that, okay? I teach you guys entry point, exit point, having a strategy, rinse and repeat, and we do it again and again. If you make 20% and you make it 3 times a day, you just made 60%. I don't care if you buy your XL option, sell it, buy it, sell it, buy it, sell it. 25%, 25%, 25%. That's a 75% move. If you're waiting for your option to spike 75% and it doesn't happen, we go back to my example about riding the elevator. You ride the elevator up. You're going to the 40th floor or the 75% floor. You're going to 75%, and it's stopping on 25. And instead of getting out and securing 25, you're going back down. And then it goes up again, now 35% floor. And instead of securing 35%, you're going back down to zero. And then it does it again. So if you traded it 3 times, you could have been like 20%, 30%, 30%. I made 80% on XL today. Instead of saying, okay, I only lost 2% or 5% because XL finished down 10% today. There's in and out. That's what we do. All right, so will I be going all in? No, but I will be taking a heavy position only if I think I'm right. Now, please don't jump the gun. People were buying UVXY puts today, and I was like, no. When it goes up and there's more inflow, there's usually inflow for 2 or maybe 3 days. Here's the good news. It doesn't go 4 straight days. That's why I'm excited. If it goes inflow tomorrow and the UVXY spikes, and it spikes to 35.50, I will be buying a shitload of puts, and I will be preaching about it, and then I will be bragging about it on the Friday wrap-up show, and I'll be like, yes. All right, next question, please. All right, Spark, what's going on with Ford Motors? Okay, Ford, I think I spoke about it earlier. It went from like $12 to 13 to 14 to 15 to 16 to 17. It's called retracement. It's going to retrace. People are going to take profit. And again, the Dow is beat up. 7 of 8 days, the Dow's beat up. Ford is a Dow stock. So you can't fight the curve. It's same with Delta, same with Carnival. Now, the whole thing about Delta and Carnival, they haven't moved much. I mentioned Delta only lost $1 in the last 8 days of trading. I mean, that's crazy. The market's been beat up. Carnival, too. Carnival's above $30. It probably actually gained something in the last week. So Ford has been on fire. There's a retracement. They sold 30 cents yesterday. Where did it finish today? I don't know where it finished, and I do know the market sold off. So let me see if I can find Ford real quick. And, oh, there it is. Okay, 1548. So it was at 1555, 1556 when it was recovering. The fact that it's at 1548 off 7 cents, that's nothing at all. That's like 0.5%. And it could move after hours. I don't really count on after hours, but there's some heavy on the buy side. It's down 2 cents after hours. It could easily jump to like $15.80 in the morning. I actually think, again, I'll mention it, Ford's going to $20 within a few months, especially with their new EV stuff. Plus, everybody likes the F-150. It's like the most popular truck. I don't drive trucks, but that is what it is. All right, next question. So, yeah, hang in for nothing's instantaneously. All right, Connor, explain inflow, outflow, Jumia and Romeo thoughts. Okay, so I already explained inflow and outflow, but I'll do it again real slow. You have to look at the 1-month chart, okay? You look, green is inflow. Green shows you demand. Red shows you outflow, okay? So it's simple. Green is good. Red is bad. Go, stop. Get it? And then you look at the size of the volume, or you just look at the volume and you say, on average, my stock does, 6 million shares a day, okay? On days that there are outflow, the outflow is only 2 million. So you know it's light volume when people are selling. Light volume when people are selling, heavy volume when people are buying. So the best charts to look at for that are EH. You can look at EH, NNOX, NNOX, and also Tiger, TIGR. You can also see it on eBay as well. Okay. Thoughts on Jumia and Romeo. So Romeo, I have my price target at $12.90. What happened to Romeo today? I think it lost 4 or 5%. It was just consolidation. The same people that invest in Romeo invest in SPI Energy. And as you can see, the Reddit boys or whoever got involved with SPI Energy manipulating the stock today, that's where all your Romeo money went. Anybody that was in Romeo, that's a newbie or a retail trader, sold Romeo this morning and jumped in SPI, probably lost their shirt because SPI spiked up 50% and then finished the day probably 20%. I don't even know. And Jumia, I already exploded outflow. So Jumia, you want to watch tomorrow morning, 10 a.m. You want to see if it's red, that's not good. That's outflow. If it's green, you can hold because it'll probably go up higher. Good question. Next question. Get the next question, Boris. Thanks. All right. Should it be 2410 saying I have the money for the 20? Should it be 2410 saying I have the money for the 25%? Okay. I'm assuming you're talking about buying options. So your first position would be 2 options. It goes down. All right. 40%. Then you buy 4 options. I speak about this a lot. You just double the number of contracts. Okay. 2 options become 4 options. Then you're saying with my next purchase be 10 options because you'd have 6 and you need to average down. It would probably be 12 contracts, not 10. All right. So it would be 2, 4, 12 because you're doubling each time. So if you have 3 contracts and you have to average down, you buy 6 more, then you're in for 9. If you have to average down again, then you buy 9 more contracts. Again, We don't throw good money after bad. So if you have 3 contracts and you average down, now you have 9 contracts, right? Instead of buying 18 contracts, you go out a month and you spend the same amount of money that you already spent on these 2 initial payments on the back end payment. That way you let it catch up. Specifically for Jumia, I've given that example twice, or Delta, you can use it, or Carnival. It works for every stock. My rules and lessons, don't think you have to just use my stocks. It works for every single stock. All right, next question. Let's see if we get some more questions here. I wish I could get this thing off my screen here. Oh, it just disappeared. Look at that. You make a wish and it's granted. All right, so I wish the UVXY to spike to 35.62 tomorrow. At that time, I will be buying my puts. I can say my wish out loud. Matt, I got $35 put, expiration 6/11, price 104, current price 104. I paid that, so you're down 12%. Should I hold until Friday? Yeah, I got the $35 put. I've got to guess that you're talking about the UVXY because you didn't say it was UVXY. Yes, you're holding. We don't scare sell. So when your shit is going down at the end of the day and you're like, Matt, should I sell at the end of the day? No. Why are you asking me if you should sell at the lowest point? Do you guys get it? We don't sell at the lowest point. We don't buy high and sell low. We look and we plan in advance. So when it does spike, whatever it is, we get out. And at the lowest point, instead of selling, see, some people are looking to sell at the end of the day. Oh, should I get out of this position? No. At the lowest point, if you have no position, I would be looking to buy. So you're looking to sell to save yourself, and I'm stealing your options because you're selling to me cheap. So yeah, Jay, let me see. 35 puts. Yeah, I mean, I think it's going down. By Friday, you're going to make money. Yeah, I would hold until Friday. If I'm right, the UVXY will go down to like 31 next week, but this Friday, it'll probably be back to 32.77, okay? Again, I'm not telling you to buy the $33 puts. I'm giving you a prediction. If I'm right, if the market settle. Now, if I'm wrong, say the meme stocks go through the roof, AMC, GameStop, BB, whatever, all these stocks, just Clover, through the roof tomorrow, 30%, 40%, and they're selling off the market, the UVXY will be spiking. You think this is normal? The UVXY will spike to like $40-something. If the meme stocks have it tomorrow morning and the markets, the institutions start selling off their stock to cover themselves, right, to cover the shorts positions, and then what happens, the CPI numbers come out or something like that, the market could go haywire tomorrow. Now, I hope it happens because I would buy some damn puts, the UVXY, but I don't hope it happens because I know a lot of people would get crushed. So again, and these are just extreme positions, one or the other. There's usually some gray area in between. All right, next question, please. Please join my platform. Pay this forward. This is organic. So if this is the first time you're watching me, just give me a thumbs up down there, subscribe to my channel, and please share this. Everything I do is to make you guys better at trading, to inform you, to help you, to answer questions. Okay, thoughts on OCGN? Looks like good inflow, low volume day. You bought the end of the day. Okay, well, buying at the end of the day seems to be what's happening. Now, remember, I said both markets, tech and the Dow, sold off extremely strong at the end of the day. Now, again, I'm a contrarian, so the market could go up tomorrow, but I wouldn't be surprised if it goes down. I will be watching. So let's look at OCGN. All right, and we're at what, $9? So we're under $10 again. Huge sell-off for 2 days straight. Now, here's the pattern. It goes up, it sells off for 2 days straight. It has green inflow, it sells off for 2 days straight. It has green inflow, it sells off for 2 days straight. So we just saw the 2 days of outflow, which measured again the 1 day of inflow before that. So if it follows the pattern, tomorrow should be green. Again, I like patterns. So I'm not a freaking rocket science here. I'm looking at the 1 month chart. I'm going 2 outflow days, which we just had, followed by 1 green day. 2 outflow, 1 green. It's been there. It's happened for the last 7 days. So follow the pattern, okay? Hopefully it's green for you tomorrow. Next question. But again, there was demand on that stock over 10. So yeah, when it's 9, again, you have bag holders on these stock. I don't know Thor besides for the superhero. And I have no comment on Thor because I'm not really into comic books or anything like that. Yes, my comment on Thor is it looks terrible. This is maybe the worst chart I've seen in a real long time. And I don't mean worst chart like it dropped off and you lost 100%. I mean for 1, 2, 3, 4, 5, 6, 7 days in a row, there's been outflow. And for the last 2 days, outflow has been huge. Oh my God, it actually went up today. It went up 0.57. I don't know. Maybe that's a sign that Thor is changing. Is that why you're mentioning it, Tammy? You think maybe this is it? This is the bottom? Now, I've thought that about some stocks before, like calling the bottom. So remember, if you want to enter stock or options, please use my 25% rule, meaning whatever money you're going to spend on Thor, whether it's just $200 worth of stock or $2,000 worth of stock or $2,000 worth of options, buy in. Your first buy-in would be $500. a quarter, 25% rule. If the stock goes down 10%, you buy in for a second 25%. If the option goes down 40%, you buy in for a second 25% of your money, okay? That's what but yeah, I mean, it looks terrible. I'm surprised it went up today. I'm actually going to look at the day chart so I can figure out what happened during the day. Okay, so they sold it off. Let's see. It spiked in the morning. They sold it off. Yeah, I mean, it looks like they wanted it to recover today. But again, just because it looks like it was going to recover today, it easily could fall like another $8 and then do the same chart again. I've been in a lot of stocks where it looks like I'm about to call the bottom, like the absolute bottom, like I am the man. All that could do from here is go up. So I'm like, yeah, I nailed it. And I nailed it for like one day and it goes up and I'm like, boom, 3%. And then what happens the next day after that? It goes down 9%. So I'm like, there goes my 3 plus 6. I no longer nailed it. I'm down 6% or 60% of my options. I better average down. And then it takes a 3-4 more days to finally turn up. So yes, Thor is close. The chart looks like shit, but it is close. And you know what I'm going to do? I don't know Thor. A million volume, and they usually do 500,000. And they have earnings, and it was as low as $78, as high as 152. 6 billion market cap. Yeah, I'm gonna put it on my watch list. I like Thor. Looks okay. I mean, I'm not entering until I can definitely call the bottom. Next question, please. Oh, John, what are we doing here, man? GameStop, Virgin Galactic. Yes, both of those stocks have no value. So basically, you're taking a momentum play. Now, I'm not insulting GameStop people saying it has no absolute value, but I would be selling the crap out of GameStop. Oh my God, it's down 12% after hours. What did they come out with, earnings or something? Earnings on 6.9. So it doesn't take a genius to tell you to get out. I mean, I didn't see it was down 13% or $40 after hours. Yes, the Reddit boys might push it back up to $300 tomorrow. And if they did, and if you're in there, great. But yeah, I'd be running for the freaking hills. Somebody's been selling a lot of shares. They're looking to unload $1 million, $2 million position at 266. And remember, it finished at 303 today. So at 266, they're taking a 15% discount after hours, selling $3 million worth of shares. That's not a good one. Let's look at Virgin Galactic. So Virgin Galactic is getting a lot of news because what's his name? Bezos is going up in SpaceX or Blue Origin or whatever it is. But Virgin Galactic, yeah, they lost 6% today because the company has no earnings. So volume has been light on Virgin Galactic since the end of May, okay? I get that it's gone up from $25 to $35, but volume has been so light. So easily manipulated. When you have a stock with volume so light, and I'm sure there are a ton of shorts, and I know the Reddit boys got into it, and that's why it went from $20 to $38 in like a week or 8 days. I would not be involved. I wouldn't be involved in AMC. I wouldn't be involved in GameStop. I've been saying sell that shit. You take profit. When you can, you take profit. All right, next question, please. These are good questions, but I don't like meme stocks. Again, it's like playing roulette. If you want to flip a coin, go for it. But you guys work really hard for your money. Some of you are telling me, thank goodness I follow your rules. I go to work and my orders get executed because I plan ahead. And I'm like, yes, you're still working real jobs. In fact, most people that follow me are either unemployed, working real jobs, students. The point is, it's $349 a week. I think I'm cheaper than Netflix. I don't know. Matt, Delta options expiring Friday. Do I think it'll go up a little tomorrow? I don't know. I don't have a crystal ball. Again, the Dow has struggled in 8 of 9 days. So this one's kind of repetitive. Let's go on to the next question. You buy them out. You buy out a couple extra weeks. Delta will recover, but please. Next question, please, Boris. All right, average down. I answered this 7 to 8 days. I would be getting out. The guy asked me, what do I think about the SDow by next week, 3250? No, if you look at the SDow chart, it actually looks like it's recovering, meaning it looks like the Dow is selling off and people are going back into tech. That diversion was real quick. I've been saying for now 3 weeks, why do you think I'm on fire? Why am I been on fire for like 6 weeks? Because for the last 3 weeks, since episode like 20, I've been saying tech is on the W, the third leg up. And I said, wouldn't this be great if this was the first day that tech was recovering? Do you remember that? It was like 3 weeks ago or 2 weeks ago. Yeah, that's why we've been killing it every day. We're in 4-letter stocks. We're in specific stocks that I see demand. And when Dow is getting beat up and people rotated to tech, they're looking for the in-demand stocks. That's what I have. All right, next question, please. All right, my 611 Ford calls. I mean, what you got at 78 are down 32%. Should I sell for a loss or roll them over? Carolyn, roll them over, please. Again, I don't care if you go 625 or 618 or July. I like Ford. I can only say that based on the chart that I see for Ford, I believe it will cross $20 relatively soon. When I sell you relatively soon, I would say anywhere from 3 to 6 weeks. So plan accordingly. If you want July options, go for it. That gives you about 5 weeks. If you want August options, go for it. Point is, average down the correct way. If you bought in at $78 and now they're down 32%, so they're down 40 cents, they're probably like 39 cents right now. We don't throw good money after bad, meaning if they're 39 cents, they're 39 cents for a reason. If they were 78 cents to start. Anyway, you could get a good jump on Ford. Any good news like that? Again, I think Ford's going to $20+. So I'm long Ford, but your options could be in trouble. So yes, you roll them over as best as you can. Rolling over means you sell on the spike, and then when the dip happens, you buy yourself out a couple of extra weeks. It's almost like for free. I'll have to explain that in a private, or not a private, like a video for just my platform members, because it's a little more complex than that. All right, next question, please. Am I still watching Trevina? Yeah, you guys remember that? So Trevina, TRVN, was like $1.53. It got beat up from like $2 and change. I got into the stock, and every day from $1.53 all the way back to $3.21, I used to make 3%, 5%, 8% a day. And all I would do is say, Trevina is a beast. Trevina is a beast. So the volume disappeared. There are so many other biotech stocks. It's like $1, probably like $1.97. What is it at now? TRVN. It is $1.98. Oh my God. Predictions are on fire. Anyway, yes, there's been buying since $1.56 again. So they repeated the cycle. It went from $1.56 to $3.21, back to $1.56, maybe even lower. Maybe it went under that. I'm just looking at the 1 month chart. But the 1 month chart tells me 2 days in a row, heavy buying. You know what today was? Consolidation. It was an outflow day. Do you know what happened to Trevina today? Nothing. It didn't move. $1.98. So yes. Now how far could this ride? It could easily move 10% in a day. This could easily pop to $2.20. And it could probably even pop higher. Yeah, it likes to spike. Again, all it needs is some good volume. Yeah, you know what? I'm going to put this back on my watch list. I haven't been in Trevina for a long time. Thank you for pointing that out, Daniel. I'm not saying I'm buying in, and I'm not giving my support there, but I'm saying it looks damn interesting. So I'm going to track a little more volume. And if you ask me in the private Twitter account, I will give you my input once I review it. I don't just jump in, unlike these other guys. So let's talk about other gurus real quick. They're on here shooting videos, and they're like, hey, bump this stock, that stock, this stock. They shoot this shit in advance. 1 day, 2 day. They go to AMC, they go to GameStop. I get they get 500,000 views. I get it. I can't compete with that shit. But I give you real time, real life information, real time, real life investing strategies. I don't just pump a stock and dump a stock. I mean, everybody that's with me knows, so it's great. Next question, please. I've got 2 more questions. If you have a question, you want to ask it, make it blue, red, something like that. We're going after an hour. I've got to cook dinner for my kids. I'm a human person. I smoke cigarettes. I take walks. I go swimming, and I cook dinner for my kids. All right, you have 400 shares of Apple, and you're not sure you're holding it long-term or taking profit. You have 400 shares of Apple. So what do you have, $40,000 worth of Apple? So here's what I was just doing, Ryan. Watch my episode 14. Unfortunately, or fortunate actually, you're not stepping in shit. But the good news is you could take your $40,000 or your $50,000 worth of Apple, okay? You could sell your Apple, claim the profit, say you still want to hold Apple long term. You could take and set aside $5,000 or $8,000 or $10,000 and buy leap year options, meaning January of 2022, okay? You buy in or at the money. So if Apple moves another 30% upwards, you're not like, oh man, I should have kept my 50 grand there. No, you're still making the same profit. You'll still make $5,000, $10,000, $15,000, $20,000 from that move. The good news is you'll have an extra $40,000 on the side, or 42 or 43,000. So yeah, I would take your profit. I would look more at options, leap year options, and it's always good to have money inside. Next question. Let's see what we can get out of here. I'm also craving a cigarette. I don't even know where my cigarettes are. Okay, input on stock hook. I thought I answered this the other day, but I don't even remember what my answer was. So let me look one more time, and then I'm going to take one more question after this. But please share this video. Hook. Oh, another pharmaceutical company. Oh my God, it looks terrible. And I think I said that the other day, it looked terrible. So it lost another 5% today. And I think I said yesterday that this stock can keep falling. So yeah, it still looks like it can keep falling. It doesn't show a base there. Can you see that? There you go. Huh? Huge selling. See those 3 days? Huge selling. And it's still going down, and it dropped 5% today. So what's going to happen tomorrow? It's probably going to drop another 5%. Again, history repeats itself. Lose 5% today, lose 5% tomorrow. Eventually it'll turn around. The stock that was more apt to turn around was the comment. What was that stock? I put it on my watch list. I'm going to give it to you guys right now. Thor Industries. THOR. Never heard of it before. It looks like it's bottoming. It could drop harder. If it drops one more time and it loses another $6 or $7 or $8, I'm in. If not, if I see a rebound, I still might be in because a stock like that could change very quickly. THOR. Somebody suggested it. It's not my watch list, but it's on my watch list now. Last question, please. And again, share this video, share my information, subscribe. I don't ask much from you guys. I appreciate everybody turning up. I swear I do. I am so humbled that you guys are turning up. All right. Compass, Pathways, CMP, good inflow. What do I think? Okay. CMPS. Let's see what we got there. CMPS. What? Compass, Pathway. Oh, okay. Yeah. Good one. I mean, it's moving pretty hard. It went from 33 to 38. So that's a $5 move. That's a 15% move in the last 3 days. Huge inflow, okay? So what I'm probably looking to do, if you're there, Bradley, here's what I would suggest doing. What you want to do is wait. Hopefully tomorrow it retracts, okay? If it goes up further, I can't help you. If you're in there, yes, hold. If you have options or stock, yes, hold. It's a good position. Yes, you have good flow. But if you're late to the game, you already missed out on 15%. If you buy right now and then it reconciles down a little, it consolidates a little, you could be off like 10% to start your position. So if you want to enter, I would suggest entering at a 10% position. That way you don't get in too much trouble. If you're in the stock or the option, good job, man. All right, quitting time all. This is how I end it. All right, thanks, everybody. See you guys later.